All right, so today we're diving deep into the world of candlestick charts. You sent in this video from Wise Trade, and by the end of this, you're going to be reading the market's language, like a pro.
Yeah, these charts, they offer just incredible insight into market sentiment, momentum. It's like unlocking a secret code, kind of, to
Right.
understanding how buyers and sellers are interacting.
Okay, so the video, it starts by breaking down what a candlestick actually looks like. It's not just, a random shape, right?
Absolutely not. Each candlestick is a visual representation of price action over a specific time period. Like, think a day, a week, even an hour.
So there's like a snapshot of that battle between, buyers and sellers during that time.
Exactly. You've got the rectangular body, which shows the opening and closing prices for that time frame. So if it's green, the closing price was higher than the opening, suggesting that buyers were in control. If it's red, the opposite happened. Sellers dominated, and the price closed lower.
And then there are those lines sticking out above and below the body. The wicks or shadows. What's the story there?
The wicks, they show the highest and lowest prices reached during that period. So even if the closing price is like real close to the opening, those wicks can reveal if there was a lot of volatility, during that
Oh,
time.
okay, so it's capturing the full range of the price action, not just like the start and the end. Now, the video also mentions that the size of the body matters.
Definitely. A long body, doesn't matter if it's green or red, it signals strong momentum. Like imagine a long green candlestick appearing after a company announces, surprisingly good earnings, right? That's a sign that it's not just, individual investors, but like big institutional players too jumping in. They're confident about that company's future.
It was not just who won, the buyers or sellers, but like how decisively they won.
Precisely. Now, on the other hand, a short body suggests there wasn't that much price movement. Maybe a stalemate, right? Between the buyers and sellers, nobody really gained a clear advantage.
Interesting. And then there's that, kind of intriguing doji candlestick, the one with a really small body or almost no body at all.
Ah, the doji. That is a sign of indecision in the market. It's like the buyers and the sellers, they're just pausing to catch their breath before that next move.
Oh, cool.
These can be really important to watch because they often hint at potential shifts in direction.
So if you see like a doji forming after a long uptrend, could that be a sign that the upward momentum is like, starting to weaken? Maybe a reversal is on the horizon?
Yeah, that's one possible interpretation. It's like watching a tug of war and both sides just suddenly loosen their grip. It suggests the balance of power might be shifting.
Wow, this is starting to make sense now. Each of these little candlesticks, it's like it tells a story, and if you start to understand their language, we can really start to figure out what the market is trying to tell us.
Exactly. It's like learning to read footprints in the sand. Each one tells you something about who was there, what they were doing, and by putting them all together, you can create a narrative of what happened, of the events that unfolded.
Okay, so we've gotten a good handle on those, individual candlesticks. But the real magic happens when we kind of zoom out and see how they all like, work together on a chart. So,
Yeah, that's where the bigger picture, starts to kind of emerge. Those individual candlesticks, they form, these patterns, trends. They can give us really valuable insights into the overall market sentiment.
right, the video uses the Apple stock chart as an example, and
Yeah.
it's amazing to see those candlesticks just paint a picture of the like stock's price movements over time.
It's like reading a historical record, almost like a, battle between buyers and sellers. Each one of those candlesticks captures a moment in that struggle.
Hmm. And by understanding those moments, we can start to see the all important uptrends, downtrends, and then of course the tricky trend changes.
Precisely. An uptrend, or what we often call a bullish market, is characterized by a series of higher highs and higher lows. You'll see typically a lot of green candlesticks with the price climbing higher.
Okay, so it's like watching a mountain climber steadily ascending a peak,
Yeah.
right? Each step, like taking them closer and closer.
A perfect analogy. Now, on the flip side, a downtrend or a bearish market that's marked by lower highs and lower lows. You'll see a lot of red candlesticks dominating the chart, and that price is moving consistently lower.
So it's like that same mountain climber, but now they're going down each
Right.
step, taking them further down the slope.
Exactly. Yeah. Now, trend changes, that's where things get interesting. It's, those moments when the market shifts gears, you're transitioning from an uptrend to a downtrend or vice versa.
Yeah. The video, it highlights three types of trend changes, which I found super helpful. And it's not always like a sudden dramatic reversal, is it?
Not necessarily, no. Sometimes you get these subtle clues that suggest a shift in sentiment is brewing, like a weakening of momentum or a, series of those indecisive doji candlesticks we talked about, forming near a key price level.
It's like watching that climber pause, like at a ledge.
Yeah.
They're taking a moment to assess the path ahead before they decide, do I keep climbing or do I turn back?
Yeah, exactly. Those pauses and shifts in momentum, they can provide clues for traders, potentially signaling like buying or selling opportunities.
Hmm. Speaking of momentum, I think that's one of the most exciting aspects of candlestick charting. You're really, you're feeling the pulse of the market. You're sensing like the strength and direction of that current trend.
Oh, momentum is crucial. And you know what? Candlestick charts offer some fantastic visual cues about it, like tight price movements where the candlesticks are kind of clustered close together. That can actually indicate strong momentum, especially in an uptrend.
Okay, so it's like those runners, in a marathon, all tightly packed together, pushing forward with like a shared purpose.
And when you start to see those, wide swings in price, with the candlesticks getting larger and larger, that could signal even greater momentum building up. It's like that pack of runners hit their stride, they're accelerating.
Right. But just like runners can't maintain that intense pace forever, momentum in the market, it doesn't last indefinitely, does it?
Absolutely not. There are signs of weakening momentum that we can look out for, like, when those wide swings give way to those narrow price movements, or maybe the size of the candlesticks is starting to shrink after a period of expansion.
Okay, so it's like those runners starting to tire, their strides are getting, shorter, less powerful. It's signaling that they're nearing their limit.
And then there are those candle color changes, which can be really important. They can signal a potential shift in the balance of power between buyers and sellers. Imagine you've been seeing a series of strong green candles, right? Indicates a solid uptrend. Suddenly, boom, a red candle appears.
Whoa. Like one of those runners, they stumble, break the rhythm of the pack.
Exactly. It might mean that the buyers are losing their grip and the sellers are gaining ground. Now, a single red candle, that doesn't automatically mean the trend is reversing,
Hmm.
but it is something to pay attention to, especially if it's followed by other signs of weakness.
So it's like a detective looking for clues. We got to consider all the evidence, not just that one piece of information.
Precisely. Candlestick charts, they are powerful, but they're most effective when used with, other forms of analysis, critical thinking.
Yeah, definitely. Now, before we, move on, the video does mention a specific charting platform, tools.wisetrade.com, for
Yeah.
those, who want to explore this further. But I think we've covered a lot already. You've given us a solid foundation for understanding the basics of candlestick charting.
Absolutely. We've explored the anatomy of a candlestick, learned how to identify trends, trend changes, delved into momentum. But what's really fascinating is how you can apply this newfound knowledge to make more informed decisions in the world of investing.
Wow, it really feels like we've unlocked some kind of secret code.
Yeah.
It's amazing that these shapes, they can tell us so much about what's happening in the market.
It's not just about, reacting to the patterns, though, right? It's about using them to really think deeper, like a springboard for, analysis and strategic thinking.
Okay, so how would someone actually use this knowledge, in the real world? Say you're watching a stock and you see some of those, bullish signals we talked about, like a bunch of green candles, maybe some widening price swings.
That could be your cue to start digging deeper. Look into the company, their financials, earnings reports, what's the news saying, anything that might be driving that positive sentiment.
So it's not just about jumping in because the chart looks good. You
Yeah.
gotta you gotta do your homework, is right. Use those candlestick patterns as like a starting point.
Exactly. It's like a detective, following a lead. Those candlesticks, they give you a direction, but you still got to gather the evidence before you make a decision.
Right. Right. Now, what if you already own a stock
Yeah.
and you start to see, maybe some of those bearish signals popping up, red candles, momentum slowing down.
That's when you got to reevaluate. Ask yourself, are the reasons I bought the stock still valid? Is something changing with the company, with the market? Why is this sentiment shifting?
It's like, checking the foundation of your house when you start to see cracks in the walls.
Right.
Got to figure out the root cause.
Exactly. Those bearish signals, they're like a warning sign. Maybe it's time to, take some profits or set a stop loss, limit your downside.
So candlestick charts are not just for spotting opportunities. They can help you manage risk too.
It's all about using those insights to make informed decisions, ones that match your goals and your risk tolerance.
I mean, we've really covered a lot today, the anatomy of a candlestick, trends, momentum. This has been fascinating.
Yeah, and you know what? You've got a foundational understanding now of how to read these charts. You can start to see those, green and red shapes, not just as random things, but as a reflection of, what's going on in the market, hopes, fears, decisions of, all those traders.
It's like we've got a new lens to view the market with. And with practice, we can, spot those opportunities, maybe even the risks that we wouldn't have seen before.
The key is to, combine this with research, critical thinking, and never forget about risk management. The more you practice, the better you'll get.
Yeah, definitely. And who knows, maybe someday you'll be the one teaching others how to read these fascinating charts.
Until then, keep exploring, keep learning, and keep diving deep into the world of finance.